Alright, I hope you can hear me. I think you can hear me. Alright, so this chapter is called the tape reading chart. So all he does is use order flow chart. And a lot of ways of doing that. You use a point figure with volume, but I think the same principles would apply on any chart that has price and volume at that price. Not like basically as it goes up, as long as you see the volume at different prices. I don't see why point figure would be required, although it would have its advantages and disadvantages as with any other type of chart. So it's just a matter of analyzing the volume as it goes up and as it goes down, as price goes up and down. That's the way I view it. Okay. So he says in 25 years, you know, he learned a lot. Okay. So it is one thing to learn to read the tape and another to develop judgment. This is a very critical point because that's why one person does better than the other, even though they use the same technical analysis technique. One person has developed some type of intuition. So next is the easiest way to teach you to tape read is by means of the tape reading chart, which is described below. This chart combines the vital factors of price, volume, and time in such a way that a trader can see at a glance such what a certain stock is doing. So before I go any further, as many folks say point and figure doesn't have a time element because it moves based on price fluctuation of a certain amount. But here he's saying that this point figure tape reading chart does have time. So I think he's just considering time from column to column, like column 1 to column 2 to column 3, where column 2 obviously occurs after 1 and column 3 occurs after column 2. So there's a time element there in terms of when the column when you go into that particular column. It's not equal bundles of time like a bar chart is, but anyway. So price, volume, and time in such a way the trader can see at a glance just what a certain stock is doing on the rallies and the reactions. Volume of each trade. The volume of each trade, the progress of the advances and declines, the proportion of rallies and reactions of previous swings, right? The lines of supply and demand, and the best location for stop orders. The means of deciding when to move stops and how far. This chart, in fact, combines on one page most of the indications required by the tape reader. It can be kept on a sheet of paper. Alright, I don't want to go into the sheet of paper thing. All he's saying is you can combine like charts together on the same piece of paper. Now the construction of the tape reading chart. This is a little bit important. Now watch this point carefully because on it depends you getting the right start in making this kind of chart. Alright, watch this point. It is simple, but if you do not get it clearly in your mind, your chart will not be correct. After a sale at a certain price, you enter the next sale in the same column if there is a blank space at the proper level, above or below. In that same column, But if that space above or below is filled, you make the entry at the next vacant space to the right. This will be perfectly clear when you go over the... Alright, so let me just try to explain that using this chart. So for example, the 102, alright, now 2 is at $40, around $40. So if you have 41, there's no space here. So you put, let's say 100 shares at 41 because there's no space. If there was a space, if the space was filled, then you'd have to go to the next column here. That's all he's saying. If there's no space, nothing in the space, it's blank, then you could put something in it. If it's filled up, just go to the next column. That's it. So, for example, again, you see where it says 4? If it traded higher, would you put the number here? Yes, you would. Why? It's blank. That's why you would put it. Alright, if there was a number here already, then you'd have to go to the next column. So the criteria of using the same column up or down is whether there's a print in it or not. If there's a print in it, you can't overwrite it. You have to go to the next column. If there's no print there, then put it there. Put the number of volume traded at that price in that white space. Alright, I think that cleared it up. Your chart recording the movement of JIK begins at 10 a.m. with a total of 900 shares at 40. So I'm going to go over this. All he's saying, this is the open 900 shares. Okay? Let me get another ruler. Alright. So your chart JIK begins 10 o'clock with 900 shares at 40. So right here, 900 and price scale is 40. So it's very simple. You just put a 9 because it's in 100. 1 unit is 100 shares. So it's a 9 at 40 is 900 traded at 40 bucks. This 900 might have been made up of single lots, doesn't matter, or one big lot, or 3 big lots, or a lot of 2 lots or 3 lots. We're not trying to quantify how many lots. We're just trying to quantify the quantity, meaning the total amount. All right, not whether there were big lots, little lots, anything like that. So it's just at 49, 900 shares traded at 40. It can be at one tick, meaning one trade transaction, or it can be in many trades. Doesn't matter. Alright, this 900 might have been made in several lots or not. Alright, as long as the sales continued at that price, meaning they want 40 bucks, so they keep on buying and buying and buying in small lots or large lots. Alright, the lot size is irrelevant. There they were added together and recorded all at once when the price changed. Okay, so again, 900 traded at 40. 1 lot, 2 lot, who cares? One trade or 2 trade or 100 trades, who knows? Not until then do you know that there will be no more sales at that price. So they want to figure out, are you done? The next sale is 100 at 40 and a quarter. So it's just going up. Why is it going up in the same column? Because the open was 900 at 40, so at that time it was blank. 41 was blank, so that's why it's going up. And the next sale is at 40 and 1/4, which is 2/8. So they skipped this here, that's 1/8, skipped and went directly to 2/8. That's why you have a 0 as a cipher. Alright, so let me just try to explain this again. It opened at 40 bucks, 900 traded. Next trade was 40 and 2/8, which is the same thing as 40 and 1/4. It skipped the price in the middle, which was 40 and 1/8. So that's why there's a 0 there. And the trade occurred at 40 and 2/8, which is the same thing as 40 and 1/4. As there were no sales at 40 and 1/8, a cipher is entered at the 40 and 1/8 level, and the figure 1 is entered on the 40 and 1/4 line. Now you have figure in the first column, alright, and 0 on the 1/8 and 1 on the 1/4 level. All he's saying 900 at 40 and then 100 at 2/8, 40 and 2/8. Excuse me, 40 and 2/8, yeah. The next sale is 40 and 1/8 and only 100 shares traded. Right there is 40 and 1/8. So it went down and 100 traded. The next is 200 at 40. So it went right back down and there's a 2. I know it's dark, you can't see it, but there's a 2 there. So all he's showing is how much traded at each level, going up and then down. So it started at 40 bucks, 900 traded, then 40 and 2/8, then 40 and 1/8, meaning it reversed down, and then I think 200 at 40 even. These two figures must go in the second column as the first column is filled. That's just the way point and figure works. And you don't really have to worry about that. Your charting software will take care of that. Alright. So next sale is 100 and then after that 200 at 3/8. So here is 100 and then here is 200 at 3/8. So all he's doing is just watching the price and the volume traded added and filling it. 2 is 200, 1 is 100. It's nothing special here. This is very simple. I know the print is a bit small, but just understand, if you have 400 traded at 40 even, you put a 4. If you have 400 traded at 40 and 1/8, you put a fucking 4 there too. Alright. Alright, then 100 at a half and no sales at 5/8. 100 at a half and no sales at 5/8. But look at this 21. So just watch this. Alright. A total of 21 at 40 and 3/4. None at 40 and 7/8. And then 41, 200. Then 100 must come down. Then 100 and a half, no sales at 5/8. None at 7/8. Oh, there it is. The 0 above the 21 is none at 7/8. 200 at 41. I think I better do it this way. Right there, 241. And then 41 and a quarter, 241 and a quarter. So that's all the way up here. And 200 at 3/8 right up there. Alright, so I don't want to go through every single print until, he mentioned anything important. But the bottom line is you're just putting the number there. Okay. All these items were recorded in the third column because the advance continued straight up without a single fractional reaction. The next transaction, 100, is at 41. 41, right there, right there. So in the fourth column, we must enter 0 on the 41 and fourth and 1/8 levels. All he's saying is 0, 0 because what happened was after the 2 at the top right here, it skipped 2 prices and traded 1 below. So this is 41 even, right? So that's why he's saying that's all he's doing. 100 at 41. So the fourth column we must enter 0 at 41 and 1/4 and 41 1/8. Next sale at 100. Okay, so it just keeps on going and going and going. All right, because I think he's just trying to show, just entering prices. So this chart, what is it? It's really a 1/8 figure chart, combining volume and price movement. I will proceed with the instructions as to how this chart should be used in actual trading and forecasting. Okay. So this entire activity that I just went through is just is going to be automated by your platform. All right. So now let's go back to the beginning and see how it can be used for forecasting. So it opens as 40. Our position is neutral because it just opened. We wish to make a trade on either long or short as soon as the stock shows a tendency. Let us assume the indication on the wave chart soon after this opening were bullish, but that we wish to wait until the stock itself has given some sign of definite tendency, which is another word for confirmation. There may be an opening bulge, but this may not be its true direction, so we shall wait until the indications are definite enough to promise a worthwhile swing. We allow half a point for commission taxes, etc., etc. So 900 shares at 440. The tape shows 100 at 40 and a quarter, 140 and an eighth, 200 at... Alright, we're going to go through the same activity again here. Ding, 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 ding. The reaction recorded by 100 shares selling at 41 marks for the present the boundary line of the trading range. Alright, so 41 at 100. 100 at 41. Right there. So it's a reaction. You have this straight up rally, right here, ding, 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 and then pulls back 1. What is he saying about this? He's saying the reaction recorded by the 100 shares selling at 41 marks for the present the boundary line of a trading range of 1 3/8 for the day so far. So what does he mean by 1 3/8? All he's talking about is here you go from 40 to 41. 41 and 1/8, 2/8, 3/8. So the high, you see that, to the low is 1 3/8. So this is the trading range of 1 3/8. We do not wish to take a position until the stock clearly indicates that it is going out of that range. So this is an important point. It establishes a range. You're not going to get in until it goes into markup, meaning goes or markdown. Alright? To trade with it might not give us enough room. So he's not going to play the range. He's going to play the trend, the breakout. So why is he doing that? Simple. He doesn't want to get screwed by commissions and taxes and trying to play small moves. Next, the tape records 100 and then another 100. That's probably this. And then what the hell? And then 200. at 41 and 1/8. Alright, so it does this. The trading range has narrowed to 1/4 of a point. What is 1/4 of a point? Is right here. This is very tight. 1/4 of a point, meaning 2/8. We are still in doubt. Next sale is 1,000. Where's 1,000? Right there. So I just want to explain what's happened so far. So it opened, there was a rally, it started pulling back. The high of the rally created what? The trading range from the high to the low. After that, it started tightening and moving sideways, basically like an apex, or for lack of a better word, a flag, right, or a hinge. Then what happened? 1,000 traded. After it tightened up like that and went into a narrow range, 1,000 traded. That's the 10. 10 right here is short for 1,000. Now listen to this. Next sale is 1,000 at 40 3/4. He says this is a sign of weakness. This is a sign of weakness. So you see how Wyckoff uses the term sign of weakness. It's a common Wyckoff term, but he used it here in the tape reading course. A sign of weakness. Because there were no sales between 41 1/4 and 40 3/4. 41 1/4 and 40 3/4. It skipped, and went straight down. So basically, there's no sales. The lack of sales and price going straight down and like lack of a better word, gap down, without sales in the middle of the gap, you know. So imagine, simple example. All right, at 40 there's a trade, at 41 there's a trade, and then it gaps down to 35. That's a big sign of weakness. Why? Because 35 to 40 or 41, nothing traded. So if there's no trade there and it goes down like that on heavy volume, he's saying that that is a sign of weakness. Up to that point, you don't really have, you know, you don't, I mean, you had 21 over here, so that's pretty good. But afterwards, this is a significant amount of volume after the range tightened and it broke. Not broke, but the bullshit flag here went down. Alright, this indicates a thin market. This is another concept that needs to be understood, that the reason why there's gap between, you know, like a thick market versus a thin market. The thick market, there's trade at almost every level, every price, and there's a lot of volume at every price. In thin markets, you can have a lot of volatility because they're not orders at every single tick, you know, and that's why it's a thin market. It's illiquid market. But anyway, when the price gaps down like that, even in a market that's quote unquote thick, if it is able to go all the way down like that, what does that mean? That means that either one side absorbed all the other side with heavy volume, you know, like a lot of heavy selling, or in this case there was just nothing traded. So the best way I can explain is just imagine you have a range tightening and then you have a big bar. That big bar expresses ease of movement. On which side? The downside. That ease of movement here with the big range, wide range, with multiple prices that didn't get traded, and all of a sudden a lot of trade as it breaks down, you know, is a sign of weakness. This indicates a thin market. Next, 900 and this and this and this. Those sales total 3,500 shares. What totals 3,500 shares? If you add up this entire column, the volume on this entire column, which by the way you can see on many charting platforms, they'll give you the volume of the point and figure. So the total volume of the point and figure is 3,500. All taken within the range of 40 3/4 down to 40 1/4. Here is some strength. But it may mean only some support. 900, 800. Here's some strength. Okay, first of all, this is weakness right here. But now he's going to talk about some strength. Alright? So the chart must tell us what the insiders are trying to do with their stock. Are they supporting it because they want to sell at higher prices? Or do they really want to acquire a lot of stock? So the thing is this strength or weakness? We know that the 1,000 here is a sign of weakness because it gapped down. But when it goes down like this, he's saying there's some strength coming. So to understand what that strength is and why is it an indication of strength. Okay, they take 940.5, making around 44 around this level right here. The 340.5/8, 300 and then 1,041. Right. That is 6,000 shares on the way down to 40 1/4 and up to 41. So it's like down and then up. On the way down, they did a lot. I think it was 3,500, and then another almost 3,000 on the way up. Right? So about 2,500 on the way up. Total is 6,000 shares on the way down and then up to 41. That does not look like buying for the sake of accumulation. If they really wanted the stock, they would not have bid up for it. They would have put it down. So here's our indication that the pool is trying to sell and not to buy. We form a tentatively bearish attitude and wait for the market to confirm, cancel, or reverse it. The bidding up proceeds. So this is bidding up. Alright, so bidding up, meaning you bring it higher and you basically distribute higher. So bidding up proceeds 441 1/8, 641 1/4, and then 1,400 here. Now the price stands at a new high of the day, which has the appearance of artificial bulge by the pool in order to attract outside buying. It requires 8,400 shares to be taken in order to advance the stock 1 1/4 point. It goes down and then up, and total is 8,400. This is not bullish because of the way they did it. Therefore, it's bearish. Why? Because of the bidding up of prices. Unless the stock goes on upward and its volume increases as it advances, we are looking for a chance to go short. Okay. I'm going to stop at this point, the thing I want to point out about this is that it's hard. Alright, like you can see how it's the same data, meaning 1,000 here at this level or 1,000 at that level or whatever, right? The data is the same. So how do you know it's bullish or bearish? It's your interpretation. See, if someone sees this and says, oh, 8,000 on the way down and then goes up to a new high, and look at that 14 up there to make a new high, you know, someone would say, oh yeah, it's bullish. But Wyckoff, he interprets it as bearish because of certain clues. Why? The first one was the sign of weakness. The sign of weakness, which was the 10 right here, or 1,000, right? that's one major indication, because it didn't trade. It skipped those where the ciphers are, the zeros are. It skipped them and went straight and went down. And then after it went down, it went all the way up, and there was so much volume, only to go up and make a slight new high, right? So is that bullish? They're bidding up for it. They're bidding up for it. Is that bullish? Nope. It's creating an artificial bulge. All right, but how would you know if this is not as easy as a moving average crossing another moving average? It's just not that easy. So how would you know? And the answer is, it's up to your interpretation. Because you show two people this, they can have entirely different opinions. It's just a matter of how, if they understand professional activity, meaning the bidding up and all that, new high in order to sell it, etc., etc. So that's why this type of chart and reading it is much harder than other types of charts. Tape reading is much harder because of this, because it's interpretive to the tape, to the person. You might see a breakout and say it's bullish. Someone else will say breakout there is bearish. It's the same data but different conclusions. Just one is right and one is wrong based on expertise. So that's the issue with trading. If you don't have that expertise, your ability to interpret it is incorrect. Okay, so for example, if this 10 wasn't here and you had numbers where the zeros are, would you still say it's bearish? There's no sign of weakness, right? There's a new high without a sign of weakness, but there is bidding up, but still no sign of weakness. So this is the type of situation to encounter, and this is it really cannot be done through a study. You cannot learn tape reading through a study. It has to be through experience of looking at a type of market over and over and over and over again. Anyway, I'm done for the day. I think the easier path, and probably is a very profitable path, is just learning the wave chart. I think you're a little better off learning the wave chart. So I think I'll focus on that, because it's very hard to interpret, and also it's very hard to chart. So you would need certain software that has the ability to do this. Alright, I'm done for the day. Thank you.